I'll go from the investment environment, and that's what Kuwait has been doing is try to increase the public spending, which is very much required again for the two reasons. One, which I already mentioned, to diversify the economy, and number two is also to create job opportunities. If you look at the demographic profile of Kuwait, there is a huge young population which is either ready to come to workforce or it will come in the workforces in the next decade or so. And unless you do sort of a major spending, you sort of try to do public-private partnerships, try to do mega projects, you cannot diversify the economy and you cannot create jobs. So that kind of investment spending is highly needed, and I think the government is going in the right direction. I think according to different estimates, there are around $200 billion of projects which are either planned or are underway, and they are in all the sectors, including the energy sectors. One of them is a clean fuel project, which is by sort of oil and energy industry. There are huge projects in housing by public works. There are projects on airport expansion. So there are projects, electricity and power, and in utility sector there are a lot of projects. So they are doing a lot of projects, and these projects have the ability to increase the liquidity in the market. So once you assign a project, you need project financing, you need insurance, you need underwriting, you need investment banking, and that kind of project, the mega projects, has an ability to churn a liquidity of around 7 to 8 times. So if you are looking at a $200 billion project over a, let's say, period of 5 to 10 years, you are seeing a liquidity of around $800 billion or probably $1 trillion coming underway. So public spending, and I think this is the high time that even when the oil prices are declining, the government should not reduce their capital expenditure projects, because these projects will give benefits over a medium to long term period. In terms of the investments and the asset classes which are looking good, I think one of the asset class definitely is the fixed income market, because now we are seeing, especially in the last month or 2 months, we have seen a lot of volatility in the equity markets. The equity markets have gone down and up, sort of, which is not sort of beneficial for the institutional as well as retail investors. We can see the fixed income might be doing better. Why? Because if you look at the equity markets sort of decline in line with the oil prices decline, fixed income markets did not move down that much. Why? Number one is the sovereigns, which are backed by the governments, and governments' financial flexibility and financial strength is too good. So the CDS market of the GCC have not gone down too much, and the fixed income securities have not seen that much of a volatility. So that is one asset class that the institutional investors who are looking at sort of GCC exposure or the Kuwait exposure can look at some of the bonds, because number one, they are giving you a good yield, a good coupon. They are backed by a good rating, a good macroeconomic fundamentals of Kuwait, and also because that in terms of fixed income, you can sort of diversify your portfolio. So that fixed income asset class and some of the fixed income funds are looking good in my view.